Candle range theory trader back with a video on swing trading the candle range theory. So let's get into it. This is without a doubt the easiest way to trade candle range theory. So let's get into it. Obviously, we have two brief examples. Doesn't matter the time frame. However, we do want to focus on just a couple, the weekly and daily. So I have here very simply candle one, which is the range candle, candle two, which is what we call the money candle or manipulation. Some people call it different things. And then the distribution or candle three, this is where we make our money right here. Okay, it is not worth it to trade candle two and candle one. Obviously, it's just the range. So the only candle we're focusing on is trading candle three. So the high time frame point of interest, to me at least, should be when you're trading the daily chart, should be the high of the week. So you want to see this candle, candle two, create the high of the week or the low of the week. The color of candle two does not matter. The only thing that matters is that this wick right here is the high of the week or the low of the week. All right, that's how it should work out. Now, the only thing that we do is this. To swing trade, you're going to enter near the close of candle two. So if you're trading a daily chart and say around 4:50 to 4:55 p.m. Eastern Standard Time, right before this candle closes, you're going to make your entry around the close of this candle, and that's it. Your stop loss will go above this candle's high or below this candle's low. And that is all you're doing. There are no lower time frames you have to drop down to. There's none of that, right? That's the whole thing. If you want, you can cut the video off right now because that's the meat of what I had to say. If you want a little more, here it is. Now, for the time frames, again, I said the weekly, and be aware that if you trade the weekly chart, you're looking at a whole time between 1 to 5 days because in theory, price could drop all week. As far as daily goes, you might be holding 1 to 2 days because remember that this will be day one, this will be day two, and in a dream scenario, this is day three, but sometimes this move may come over 2 days. So that's why I say 1 to 2 days, right? Now, can you swing trade other setups? Yes, you can, but I'm focusing on these two because you're not going to swing trade a 30-minute chart. That's not really how swing trading is, okay? Can you experiment with others? Oh, yes, you can. Now, just to reiterate, I prefer to see candle two make the low or high of the week on the daily time frame, but when it comes to the weekly time frame, I don't care. If you want to try to say the weekly time frame has to make the low of the month, that's up to you. But just any old regular candle two right here, if I see a week that just pretty much consolidates after a candle one forms, I would feel fine taking candle three for the next week to go down. That's not a problem to me. So let's continue. So here are just a couple of examples. So this is a weekly chart. So this is candle one, candle two, and then candle three on the week. So your entry, if you're trading the weekly, so it'll be around Friday, near market close, like around 4:50, 4:55. One thing that I have to say if you're going to trade the weekly chart though, weekend gaps. You have to watch for that when setting a stop loss because I've seen some very ugly gaps. Does it happen every weekend? No. But can it happen though and like stop you out for more than you plan to lose? Yes. So be careful trading the weekly chart. If you want to wait for Monday open or Sunday night market open and then the spread calms down, your stop loss is still going to go in the same place above candle two, but you want to be sure that the spread over the weekend doesn't take you out. So again, on this weekly chart though, the stop loss would have been about 50 pips from the open price. This would have been the entry around this level here because this is candle three's open. And then you can either set your stop loss at the bottom of candle one. Now, if you notice too, price didn't actually reach the bottom of candle one, or you could just don't even set a take profit and leave it open and then just close it manually. All right. So this one dropped about 145 pips to its low, and then it spent the rest of the week retracing. So you will see that as well. So, but that's how that worked out. So let's see another one. This is a daily chart. So we have day one, day two, which created the low of the week. So the entry would have been around the open of day three, okay, close to the close of this candle here, candle two. And then your stop loss is just out of the range. That's all you're doing. Okay, so mainly it's about stop loss placement. So the entry is not that important because you may deal with some drawdowns. See, our price came all the way down, it came close, but your stop loss again is out of the reach. If you're right, candle two should hold. Okay, if you're wrong, candle two will get broken. So it's going to go one of two ways. Okay, it'll either break candle two or it won't. So you just got to accept that. So the stop loss here was 64 pips. and price rose about 131 pips in one day. And that was close to about 1 to 2 risk to reward. Okay. So I'm not teaching about scaling in or anything about that. This is just one entry, set it and forget it. So keep in mind, your stop losses can be pretty large because it must be below candles too low, candles or high. And those could be pretty sizable. In some cases, you may be dealing with like a 100 pip stop loss. I mean, that's what it is. But don't think it's strange. But either way, stop loss goes where it goes. I'm not saying, oh, try to put it a little bit outside of the. No, stop loss, if you're swing trading for your best odds, your stop loss must go where price has not been because you're counting on this low to not be rated anymore. So a couple of bonus tips here. If you have a high risk tolerance, you can use this method for challenges. You have to just be real indifferent towards it. So let's say you just buy a challenge, a cheap challenge for like say $80, and then just risk like 2 to 4 to 5% and try to get those big returns. So you just take one swing a week. Maybe you could pass in a couple weeks and then do the same thing on the prop account. And think about it. In theory, if there are no consistency rules, and let's say you pass an account, and let's say you have like just say for instance a $10,000 account, you pass the challenge, okay, swing trading it, and then you risk like let's say 4% on an account and you get 1 to 2, right? So are you risking 4% to get 8%, right? That would be $800 before the profit split in 1 week that you could have made on your 800 on your $10,000 account. Okay, because you're still around 1 to 2 or so. So a bit of a higher risk to reward. If you want to take lower risk, you can do that too. But I'm just saying, just real indifferent. Like you don't really care. You don't really necessarily need the money. But for a decent side hustle, if you don't want to constantly hover over a challenge account and see, oh my God, am I doing this right? Just swing trade it. And it's just, again, you're not banking on the money that you're putting in the challenges to pay your rent. Maybe you will eventually, but if you have the disposable income, then, swing trade your challenge account and just whatever happens, happens. Now, as well, another bonus tip is you can also hedge the account if you're wrong. Okay, and I'll put a video that explains that more in detail about the nuts and bolts of that. But whereby if you hedge the account, you have a personal account with a smaller amount of money, and you have a challenge account, and you just take the opposite position. So if you swing trade one in your challenge, you take the opposite side of that trade in your personal account. That way, no matter what price does, you'll win. So this is an example of that. So let's just say you think you have a candle one, a candle two, okay, which creates the first low of the week. Your entry would be about right here. So in your challenge account, you would take this entry long, expecting price to go up. This is a daily chart. And then, but in your personal account, you would take this entry short in case you're wrong. And stop loss would be about 60 pips. So you put a 60 pip stop loss on your challenge account and a 60 pip stop loss on your personal account. So the personal account stop loss would be up here because you're short. Your challenge account stop loss would be down here below candle two because you're long. So this price here dropped 100 and it was over 100 pips. I know for sure. So on this entry to the downside, your personal account would have seen a win. But let's just say if you risk 3% on your swing account, you would have lost 3% on your swing account, but you would have gained 100 pips plus on your personal account. Okay. But like I said, that's just a brief aside. I'll put a link in the description that'll explain that more. But that's just something you can do. Do you have to do it though? No, not really. Okay. So some final thought: swing trading is better for bigger accounts. I would not try to swing trade a $100 account because the stop losses are so big. So if the stop losses are big, by default, you're going to have smaller positions. So to me, if you have a small account, you need to be scalping or day trading. It definitely is a time saver though, because you're talking about checking charts once a day or once a week. Okay. Like it took like 5 minutes to spot a candle two near the daily close, and that's it. Okay. It's simple enough for a child to trade. A kid could trade this. Okay. You just wait for candle two, and when it's about to close, just enter the trade and walk away. That's it. Now keep in mind swap fees and spreads when you're holding overnight, especially if you're swing trading the weekly. Not so much on the daily, but definitely on the weekly. Okay. Every time you hold that trade, there's going to be swap fees. So you need to know about that. And you can do both. You can scalp and swing. My ideal would be a ton of scalp accounts and just a few swing accounts for big moves that don't require a ton of time. So, taking a challenge here and there, seeing what happens with the swing trading method and compound those. And then you have I talked about infinite scalping on that. That's like my daily income. And then my more passive income would be my swing trading account. So that to me is the dream scenario for a trader. Some traders say act like you only got to do one. Why limit yourself? Do both. It's like having two employees that have two different tasks, but they're still working for the same company, which is you. Okay, you don't hire all your employees to do the exact same thing if you own a business. So why would you have two accounts that do the exact same thing? You don't have to. Okay, it's your business. You run it as you see fit. So I appreciate your time and attention. Thanks for watching. I hope that helps you in your trading journey. Don't forget to like and subscribe. Have a great rest of your day. Take care.